Welcome to TheoTrade. This is Don Kaufman. It is August 15th, 2016. We've got about 34 minutes to go to the closing bell in today's trading session with the grind in the broader markets once again to the upside. You've got S&Ps, you've got NASDAQ, you've got Dow, you've got Russell, all across the board green. In the S&Ps, kind of the laggard today. They're up about 0.3%. The one thing that's noticeable to me is the lack of conviction, the lack of really any trade volume out there. Again, the S&Ps, they've been a little bit higher in this session. With 30 minutes to go, still the possibility of selling off here just a bit. But this is some of the lowest volume that we have seen recorded. Again, with 30 minutes to go, we're going to be lucky to do 1 million contracts in the S&Ps. So there's absolutely no conviction to the trade. And the only thing in terms of low volume that you even have to compare that to is, you could zoom in over here and here's the day, after Easter, we did about 930,000 contracts. But that's the kind of light trade that we're seeing. And again, on an intraday basis here, it almost looks like the market is closed, aside from a couple of big volume spikes here and there. Now, in today's evening video, well, sure, we take a quick glance at the S&Ps. Volatility, volume, extremely low on both fronts. But here, we're going to take a look at Google and a trade specific to Google. So let's go ahead and let's start with a 9-month chart on Google. Well, first of all, the earnings announcements has made Google a bit of what I would call a gap-filled wonderland. Nevertheless, Google, in just the last month plus of trade over here, roughly speaking, we've traded from $680 to the $810 range. We're finding a bit of resistance in and around 810. Now, today here at TheoTrade, we just invited one of our newest members of TheoTrade, one of our newest instructors and traders on here. His name is Jeff Bierman. I've worked with Jeff at TD Ameritrade. I've worked with Jeff at thinkorswim for many, many years, know him extremely well. And this is kind of one of his calls today. So I looked at this more as a quant than a market technician, but Jeff forced me throughout the course of today's session. He goes, hey, pull up some technicals on it. So I'm going to do the exact same for you, I think, to make this a little bit more transparent. I'm a trader that just doesn't really look at technicals, but Jeff had me here, today at taking a look at Google in confluence with. He used the MACD prices. For those of you that are familiar with MACD prices, if you're not, well, it's actually going to be the topic of conversation tomorrow in the TheoTrade chat room. But MACD with prices could possibly be rolling over here. Next, we go to the stochastic. It's in what we would term ridiculous territory. So this is the slow stochastic, and it's just 80, 20, 10 in there. Looks like it could be rolling over just a bit. And last but not least, this is the old school RSI Wilders, which once again is in, ridiculous territory. So I had Jeff take a look at all three of these. I arrived at the idea of building a bearish trade prior to some of the technicals, but the technicals again are all in confluence with what I saw kind of statistically speaking in this particular trade, and we went ahead and built a bearish InOut Spread, which I'll bring you to here momentarily. Another viewpoint here in terms of Google, even if you bring up a 3-year chart inside of Google, there's only been a handful of times that we've actually seen RSI at the levels in Google. There's only been a handful of times, and again, this is on a 3-year, that we've actually seen the slow stochastic in territory similar to what it currently is. And last but not least, of course, the MACD also in not uncharted territory, but a fairly extreme territory and appearing to roll over here. So again, I want to invite everybody to check out Jeff Bierman. He'll be doing some of these evening videos from time to time. Again, Jeff, longtime associate, worked with Jeff for a number of years here, and we want to bring you, not just a bunch of quants, but a few market technicians, and that's exactly what Jeff has provided us here in terms of the Google trade. So with that, Google met all my kind of quant and statistical criteria. I went ahead and I built the SEP 16, that's the standardized September expiration with 32 days remaining, and I built a bearish put spread that we purchased. Now, to do this is what we call an InOut Spread. The reason I use an InOut Spread, what we call it an InOut Spread, it's one strike in the money, one strike out of the money. I'm buying an 810, selling the 805 puts, so buying the 810, selling the 805 puts, again, for the SEP 16 expiration. I got the trade on right at about 235. I filled a contract at 233, filled one at 235. Looks like we had just about 500 of these trade today. And this is the type of trade. It's a $5 wide spread. The most you can make on a $5 wide spread, of course, is $5. I'm not trying to make $5. I'm trying to make about 55% of whatever my risk was. In this case, my risk was $2.35. Okay, tack on about 55% to that, and I'll look to exit this Google trade. Again, it is undoubtedly a bearish trade. But the question is, when you start to go in there and you look at the analytics of it, how far down does Google have to go? Well, I'll give you one quick take on here without going into too much of the statistics, without going too much quant geek on you. Just look over what's called probability of touching. I mean, you've got a probability of touching all the way down to the 790 level, which is more than enough to make this trade profitable, of even 63%. And that's all I need to see over there. Is it a comfortable trade? Now, you have to recognize, if you're not comfortable risking $2.35, get out of the kitchen now. You've got to be willing to part with this capital. There is no easy defensive play in a marketplace that's been utterly and completely flat. I mean, if you take a look at the recent kind of Google price chart over here, and let me just zoom into that, there's been nothing. I mean, we have traded in a range on Google from roughly 800 to 813. Okay, again, this is an underlying that used to make those kind of moves intraday, would make $10, $15, $20 moves. Now can't do it in the better part of a few weeks after its earnings period. So think about it if you like the trade of there. Again, it's an 810, 805 put spread, trying to make 55% on it. Hey, whether you're a quant, a little bit of a statistician, or you're just into technicals, well, all of them right now are in confluence. Thanks everybody for joining us here at TheoTrade. And again, I want to welcome Jeff Bierman to our crew of traders and instructors, and Jeff will be on his session tomorrow right here in the TheoTrade chat room. Again, thanks everybody for joining us. Have a great evening. Bye-bye.